do that, do that. Fantastic. So, welcome to debt collection and the Business Hibernation Debt Hibernation Scheme. We are accountable, so we are retained agents and certified silver bookkeepers with the Institute of Certified New Zealand Bookkeepers, and we're also silver champions, so with Xero. My name's Hayley, and I'm here today with Shane Crawford to talk to you about debt collection. So this is us, so we're accountable. So that is my right hand lady, Natalie. I would be lost without her completely. So we are very much a team. We do bookkeeping, financial accounting, and we also specialise in companies that are struggling financially. So those that have debt with IRD, because my background is inland revenue as a debt collector and a company liquidator. So we can actually help those companies turn them around and make them profitable again. And where we get most of our fund from is the business development, where we get to develop our business owners and create really awesome companies alongside our clients. So today we're going to talk about terms of trade, what you need to know about debt collection, what to look for in a collection agency if you get to that point, and business debt hibernation, and then where to get more help if you need it. So today I'm very, very thankful to the amazing Shane Crawford from Specialist Collections and Consultants. I've worked with Shane and referred a number of clients to him, and he is very, very passionate about this subject. And he's collected debts that we'd actually written off. So welcome very much, Shane, and thank you for hanging out with me this morning.
No, it's absolutely my pleasure, Hayley. Delighted to be here, delighted to have some input into your webinar this morning. And I'm sure that your viewers are going to find it very, very informative and very educational, and something that is going to help them moving forward. So thank you for the invitation, Hayley. I really appreciate it.
There's one thing on your website that I absolutely love, Shane, and I think I'm going to steal it. It says, if you're serious about your money, then you're serious about success. I thought that was really, really powerful, that point there. And then if you want success, you must use a specialist. That is actually key to the message that we're actually delivering today.
Well, look, I think New Zealanders, as we know, we're a can-do people, we're a can-do country, and we try sometimes to keep things close, to try and do it ourselves, and obviously, and perhaps for the right reasons, cost effectively.
Yeah.
But at the same time, it's a process of knowing when to let go, and bringing in someone else who's going to bring you a positive result, a quick result, and a cost-effective result. And often, as much as we like to educate ourselves as we continue through life and be can-do people, look, we don't know it all, I say respectfully, and sometimes you just need to go to people who have that added knowledge and experience to provide a service and add value to what you do.
And I think that's key, and like we sort of say to all of our clients, you know, you need to build a team of experts around you. Surround yourself with people that can support you and fill in the blanks. So I thought that quote on your website was incredibly powerful.
Thank you,
so
I do appreciate it.
Today I thought we will talk about how to minimise risk before you actually get into this position. So obviously with COVID-19, people are going to be really scrambling to try and make some money because everyone's going to be hurting. And I saw when I was working in solvency, you know, the little tradies especially, one of them got done quite horrendously because they went out and redeveloped the kitchen, the bathroom, all this sort of stuff for a lovely lady. She was, you know, older in her years. And then when it came time to pay, she was like, it's not my house, I'm not going to pay the bill. And it wasn't, she was a tenant. And they hadn't actually done their homework. And I said, well, why didn't you actually take a deposit? And they said, well, that's our point of difference. We don't do deposits. So what would you recommend clients do when they've actually got a new client that's wanting to spend money with them? What do you think that we should do to actually protect them better?
Look, if I may just go back to the insurance principle, the normal general insurance principle of when you renew your house and contents policy every year, Hayley, your motor vehicle insurance policy every year, you've got to make a disclosure to your underwriter every year about accidents that you may have had that you claimed or did not claim for in the previous 12 months, perhaps any speeding fines or traffic conditions that you received in that 12 months. And there's an obligation upon you as an insured person or as a person to disclose that to your insurance company for them to be able to take that information into consideration and make the decision whether they will decide to renew your policy for another 12 months or you decide to go somewhere else. And I think I would like to see that. I believe that's a very strong principle in essence of risk assessment. And business is about risk assessment. And I'm believing as we go through and come out of our COVID-19 reality, Hayley, that risk assessment should become of paramount importance. I think the issue we hear for all business, as you said, about terms of trade, I will say respectfully to sole traders, partnerships, small companies that are directed by one person and the shareholders in that company are one or two, perhaps husband and wife, two partners, is that you do need terms of trade to support your energy, your vision, and your activity in your business. And their terms of trade, whilst they will never guarantee in all circumstances and in every case payment of money that is owed to you, but they're going to afford good and adequate protection to help your business move forward in the future. And I think that's very important. Secondly, Hayley, credit checks. We came through life, I believe, Hayley, where we saw that, we'd done business on a shake of a hand. Look someone in the eye, firm grip and a handshake, and business was done and were held to account to fulfill their promises. We need to move on slightly from that, even though we're not in the business of interfering with an individual's personal preference around how they want to do business. But you must have more checks in place. A credit inquiry will help. It will tell you if the person or the company that you are entering into business with is, for whatever reason, an undesirable credit risk. There may be many payment defaults they've had previously. They could even be already a bankrupt, and it's a good way of finding out whether you can legally do business with this individual or the company. And more importantly, don't be afraid, and I say this, to get on the phone and check previous trade activity with trade suppliers or other credit providers, because the credit reports will show, Hayley, the amount of the default or money that is owing, the date the money was owing, who it's owing to. But for me, doing risk assessment, that just scrapes the surface.
Yeah.
It's about people's attitude, their willingness to engage with you, willingness to cooperate with you, and the willingness to take ownership of everything in your business relationship, and how you're going to basically get along in business. And sometimes you can find that out by picking up the phone and talking with other credit providers.
And I think that's really good advice. And I think, from where we sit being accountants and bookkeepers, you've got to follow best practice and actually put things in writing. We can't operate on a handshake anymore. It would be lovely if we could, but that's not the world that we live in now. So like you said, send out the terms of trade, email out a quote to be approved, at least if they're accepting that quote and it's got your terms of trade on it, then, it's going to give you something. And request a deposit. You are not doing yourself any favours to be the only one in the industry that doesn't accept a deposit. That is not a unique selling point, the fact that you don't take a deposit. That actually makes you at risk quite heavily. And then once again, you know, your signed terms of trade, if you can actually do that and actually know what's going on and actually research that client, I think the minimised risk would be a lot better for a small business owner.
And Haley, I agree with you. And if I may just add to that, the terms of trade must be signed or agreed upon in writing before the goods and services are provided. And that's quite crucial, and where people need to understand that the contract that you're entering into and the terms of that contract, they must be agreed before goods and services are provided by an individual or a business, and that's quite right. And I do reinforce what you say, Haley, and I believe pre-COVID-19, but also particularly coming out of COVID-19, that deposits now will be essential to helping cash flow in a business moving forward.
Yeah. So if you're using Xero, Shane, and you've sent out your quote via Xero, and your terms of trade are attached to that quote, and the quote actually says, by accepting this quote, you've accepted our terms of trade, is that enough for a small business owner to say that my terms of trade have now been accepted and signed?
Long as there's an electronic trail, Haley, I say yes. As long as the acceptance has come back to the individual or the business again before the terms and the services have been provided or started, a service started or goods provided. As long as there is a trail of basically offer and acceptance, the terms of trade is an offer to the person that you're doing business with, and by accepting your terms of trade, then they are accepting your offer, and generally the contract is formed, and then you know, you can go and provide the goods and services. So timing is everything. I have many cases where people have provided goods and services to a high value, remembered that terms of trade were not completed or agreed upon, they were sent later, and then of course disputes arose in the repayment of the debt, and it makes it quite difficult. So I guess to be prudent and respectful of yourselves in business, and respectful of your operation and the way that you move forward, get your terms of trade, get them all in order, and before you do anything.
And I think that's one thing there. Xero does actually do that incredibly well. So if you are using Xero, you know, get in touch with us or get in touch with your bookkeeper or accountant, and they can help set that up so that you don't need to remember to do it. It's going to happen automatically. So I think it's critical to actually remember that it's great to have a credit policy in terms of trade, but it's even more important to carry out that credit policy. So that's like analysing your new clients, monitoring credit customers' payments, actually collecting your debt, and you know, at the end of the day, your terms of trade will say that if you don't pay your bill, then you could end up in debt collection, actually having a collection agency. So let's go through those points. Credit policy terms of trade. So that is around payment terms, including the length of the credit period, like payment fees, rights and obligations of both parties, types of payments, terms of quotes and deposits, delivery, collection policy, that sort of stuff. You write these, don't you, Shane?
Yes, Specialist Collections and Consultants Limited do write terms of trade. I'm not a qualified legal lawyer, Haley. Unfortunately, I didn't finish my LLB degree, but I am a qualified legal executive. But we keep the New Zealand Law Society happy, and we have a solicitor on record who sends out his terms of engagements and basically checks our work. So it's an added layer of protection for our clients, and we do terms of trade, and happy to help.
So, you know, going back to that, that's actually really cool. The fact that you've surrounded yourself with experts to actually work in your business. So you know what you know, and you've got other people to help you do your stuff. So that's a really good example of what small businesses should be doing. We can't do everything ourselves.
I think it's a very good point that you've raised. Often debt collection agencies have have they've been considered to have some commercial contagion for whatever reason, or they're down the bottom of the business tree in a business of last resort. I'd like business owners, particularly new ones coming into business as we move forward, to maybe look at that attitude. We don't need to be a business of last resort. Often it's too late, or we're trying to, open the ambulance door down the bottom of the cliff. We can add real value at a lot sooner, in the process if, account becomes overdue.
Yeah, I think that's really powerful. Debt collection should not be the last resort. It should actually be something you're proactively, and I think we've got it right here, monitoring your credit customers. Be proactive and not reactive. So this is about actually putting all those systems in place, and this is where you can actually help protect people before they even end up in this position. Am I correct?
We can indeed, absolutely. It's continuing to communicate, Hayley, with your customers and identifying changes in behaviour or payment patterns. And I think for a business customer too, it's always good to communicate. And I believe that it's always good to be prepared. And if an individual or a company really truly understands the business of those that they're doing business with, it helps them to maybe identify problems earlier on, some issues. If there's any changes, don't be afraid to act. Because look, as I said, I believe that credit management, debt collection, business in general, I believe that prevention is better than cure, and don't leave it too long. And we do procrastinate.
Oh, we do. And I think we ran a Facebook Live on Wednesday around getting paid. And I think the key thing here is, because we know coming out of COVID-19 that people aren't going to have the available cash flow to actually pay people's bills. So, it's about actually keeping in touch with your clients. And even if you can just get small payments, is better than nothing at all. So we don't want you guys to be left to the bottom of the heap. Let's actually really keep a good eye on what's happening with your credit customers. Send out your invoices. The amount of times that I actually see people, they've done work 3 months ago and now they're just getting around to sending out the invoice. We've got to do the paperwork. And if you don't have the time, and this is something we hear quite often being bookkeepers, if you don't have the time, actually outsource it, because you'll find that the cost of getting someone else to manage your administration is a lot less than what you could be if you were out earning.
And if I may just add to that, Hayley, too, we see often invoices not made out correctly. For example, if a company has invoiced another company, it's the wrong name, or the wrong legal entity, or the wrong company in a group of companies. And all these errors in administration do slow down the payment process, because often we come back and we do find often that an invoice reissued in the correct legal name, the description of the goods and services described adequately, and some little minor changes, the matter's resolved. So it's crucial that the individuals watching this, and also the company directors and shareholders, you can never pay enough attention to having your own house in order, and your administration is correct, and you know who you're legally dealing with, and invoice them rightly, and all your information is correct, Hayley.
And I think if you've done that first step of the quoting and the terms of trade, there shouldn't be any issues at the end of the day, should there?
There should not be. But look, one thing, Hayley, is that cash is king, as we know, and when cash is in short supply, then the integrity and the moral switch gets called into play, and there's perhaps another discussion. But it is ordinarily, as I said earlier in our introduction, the terms of trade are very important for all businesses. It's important that they are kept up to date, so they are current with the current, correct with the current legislation, and perhaps also your operational changes. But very important. But get your house in order.
One thing I did actually want to ask you, Shane, is your opinion. I mean, I know what my opinion is. But you've got a small business and they've got all these invoices and cash flow is very tight. And so then they do the debt factoring or they sell their invoices to someone else to get paid the lump sum up in advance. What's your thoughts around that?
Look, initially, I am in agreement with it because particularly companies and companies directors, a company has got to satisfy the solvency test ordinarily under the, well, not ordinarily, in the Companies Act 1993, Hayley. A company must be able to pay its debts when they fall due. If they cannot, for a number of reasons, then technically the company may be insolvent. And there's responsibilities upon a company director to trade correctly, fairly, and not recklessly, and make good decisions for the company in general. And so I can understand why they would want debt factored. The problem we have here is that you need to be very careful about the product that you're going to use. Often, if a debt is factored, and so your client, Hayley, for example, is paid and received the money and they think that's the end of the matter, the factoring company perhaps goes and attempts to collect the payment. The person or the company defaults, and if they default, make 2 or 3 payment arrangements and they default, then that factoring company comes back, knocks on the door of your client and says, we haven't been able to recover this money, give it back to us, please. So therefore, that debt comes back onto your company's books, a debt for them to collect. It's again, their cash, so in essence, their cash flow and their money has depreciated and been outstanding for a long period of time. And then this is where the problems we have. So I would suggest, yes, I can understand, and yes, for some businesses, it's a good idea. I would say at the moment, with COVID-19, for directors and shareholders, and individuals, partnerships, contact your bank. If you haven't already, build a really good and strong relationship with your bank. Make sure the bank understands who you are, how your company operates. And some of them perhaps are offering interest-free loans at the moment, and that may well be a better option than factoring. Debt purchasing is similar. Companies have done that at the end of the day because they have had a lot of bad debts and have decided to write them off and try and get some money back. It's something that's been operating, particularly in New Zealand, for many, many years. But look, people need to educate themselves now on the need for this, the reality, and what value that they can actually get and ask for if they do decide to reduce their debt.
Yeah. So I think one of the key things is that you've got to try and collect your customer payments and not wait for them to be a month down the line. Actually keep in touch. And in our Getting Paid Facebook Live that we did on Monday, Wednesday, it was around actually keeping in touch with your clients and actually asking them, are they okay? Is there anything that you can help them with? And actually the fact that we're all small business owners, I mean, you're a small business owner, so am I. We've all got to try and do our very best to keep money cycling through the community to keep everyone afloat. So I think it's not a bad thing to actually say, hey, look, I'm a small business owner just like you. Is there something that you can actually pay me just to show goodwill, really? But then it's a case of, call your customer, keep them top of mind so that when they're looking at, oh, I've now got some money in the bank, they're going to come and think of you, and follow them up, send statements out. But if you still can't do that, then really the only option is a debt collection agency. Would you agree?
It is, Hayley. I think communication, with your customers is important. One option or one suggestion that may be a positive option for your customers is when they've sent invoices within a day or two, just ring to confirm that the goods have arrived and been received and the service was performed adequately and everything is fine. There's no problems with the invoice or the invoiced amount. and then it's just a matter of time of getting it paid by your, by the due date in your invoice and therefore your terms of trade. It's about, I guess, having your clients reinforce to you that they are happy, and this in some ways can stop the dispute process at a later date and slow down the repayment of money, which is manifested through, disputes that really don't exist.
And I think that's the beauty of Xero too, is like if you've got an invoice that hasn't been paid and you ring up Joe Bloggs, your client, and discuss it, in Xero on that invoice you can actually write file notes. So I spoke to Shane and he said I'm amazing and that he's going to pay my bill on da 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 da, and then we can actually show our debt collection agency this is all the time that I've actually spoken to him and this is all the comments he's made. So it's all connected and nice and tidy. That's what I love about Xero.
Yep, I agree.
So notes, dates, times, who they spoke to, that's all valuable information for a debt collection agency.
Oh, very much so. It helps. We often find that when a debt collection agency is appointed, people are desperate for their money, and they do give us very limited information in the beginning, Hayley, and it's simply the name of the debtor, whether an individual or a company, the amount owed, and the dates of the invoice numbers, and the fact that in their opinion, or the client's mind, that the debt is not in dispute, and we were asked to go and collect on that debt. And we spend a lot of time, which people don't understand, is that we spend a lot of time perhaps resolving disputes or obtaining information and to give back to the debtor, to make them aware of the situation as well, and to resolve a dispute or engage in a compromise settlement to have a win-win for both sides. So the more information that we can receive as a collection agency in the beginning is better and very, very helpful. And it just, again, it's about having your money returned to you as quickly as possible, Hayley.
That's really cool. Yeah, at the end of the day, why have your money lining someone else's pocket? So I think one of the things I see is when clients get desperate. I mean, we work with clients who have got debt, and obviously when clients are trying to collect debts, they just go out to any debt collection agency because there's quite a few of you guys hanging around. What sort of things do you actually need to consider when deciding which debt collection agencies you should actually work with?
There's a number of factors, but I think important ones, Hayley. Firstly, we can the fees charged or the debt collection agency commission. Now, one thing before I start is that, and I alluded to a little bit earlier, debt collection is very, very labour intensive, and we are working behind the scenes, and a lot of people don't understand what the collection agent or the agency goes through to actually get a result to return money back to its client. There are often many phone calls. Debtors are not forthcoming in responding to emails, phone messages, and text messages. So often we have to find them, we have to seek them out, we have to visit them personally to talk to them about the debt. So most debt collection agencies, as I understand it, can charge somewhere between 15% to 25% debt collection commission. It does depend on the dollar value of the debt. Of course, I'd be horrified if I heard of a debt collection agency charging 20% debt collection commission on a $50,000 or $100,000 debt, Hayley, that was probably recovered and paid within about 24 hours. So, you need to be clear on the client would need to be clear on how the collection commission works, how it is charged, and that's most important. The collection agencies here offer a number of services, Hayley. I mean, they do go and field call or conduct field visits to the debtor's address on the basis that the debtor is not communicating intentionally or inadvertently. They offer credit reporting services as well through credit reports. They do offer the opportunity to load defaults where necessary. Uh, we are not a big default loader at Specialist Collections and Consultants Limited. We would prefer to work with the individual and gain a result. We do know that a credit default ordinarily is a black mark against someone's name for 5 years. It remains on a credit report, and I would caution people at the moment not to arbitrarily load defaults. We've come through COVID-19. We need to be sympathetic and understanding to an extent, and by rushing out and loading defaults against individuals' credit files or personal credit files, that could be a way of shooting yourself in the foot in the future, and it may preclude you from getting paid. So, be understanding and sympathetic to a certain extent.
I can sort of imagine, and debt collection agencies are businesses at the same time, but I almost see, there are lots and lots of package deals that you can do. So you can pay up front and we'll collect 10 debts. I think that's almost a self-fulfilling prophecy. If you go and buy the service, that you will end up with 10 bad debts. Is that something that's
Hayley,
a good way of...
Yes, look, thank you for raising that, Hayley, because I overlooked that myself, and it is important to comment on that. There are businesses out there that where an individual or a company can go and buy a book of 10, if you like, debt collection debts, 10 debt collection letters, and they are sent in a timely manner, perhaps a week apart, trying to obtain payment. I suggest to your viewers that they really consider that, whether it is going to be a fit for their business and whether it's a cost well spent. Society's changed, Hayley.
Yep.
We know that people do not ordinarily respond to a letter in the mail like they used to. People today, when they're communicating, some are on, have contracts with their mobile phone provider. Some are on prepaid numbers. Often prepaid mobile telephone numbers are changed consistently and often. And emails. So it's probably phone calls and emails and text messages. Today, depending on your age demographic of who you're dealing with and who owes you money, a lot of people would prefer today to just communicate with you by way of text message. I believe in our protocol is that the best way to collect money, the quickest way to collect money and the most cost-effective way to collect money is to speak to someone or go and talk to them face-to-face. And often a face-to-face meeting does get a better result than probably trying to resolve something over the telephone indeed. So we're not a big letter user, to be truthful. Hayley at Specialist Collections and Consultants Limited. We do obviously send one letter, which is an introduction to the debtor, if you like, our sort of terms of engagement of who we are, why we're involved, who we're working on the part of, and from the information that we have, there's a debt owing and please pay it, and in general terms. But other than that, that's the only one we send.
Yeah. And I think, from my time at Inland Revenue, working in debt collection, it is a thankless job. You do get quite a bit of abuse. I think the amount of things that I've been called has been quite entertaining, really. But it is a special person that can actually collect debt. And I don't think that Joe Bloggs, the business owner, has the skill set or should actually even want to have the skill set to be able to collect debt.
Hayley, look, thank you. I often watch Police 10/7 when it comes on TV, and the drink driving programs on TV and border controls, and we're very similar in that we're dealing with people, and every debt collection person will always be professional, be courteous, be fair, and be polite, and want to resolve a matter quickly, because obviously the quicker a matter is resolved, the debt collection agency gets paid quickly, the client gets paid quickly, it's a positive result, and it's all warm and fuzzy, and everyone's happy. But we do deal with people, and we're dealing with different people from different social classes, different stations in life, and people who
Stressed and emotional.
emotional, and sometimes, so I do sometimes consider that the debt collection agencies and the individuals working in the business, we're very similar to the police officers on the street, and that we cop the abuse just as much as they do.
Yeah. And I think, that's, we've discussed a lot of how to collect debt, but now let's actually look at this new debt hibernation scheme that the government have announced. And I understand it hasn't actually gone through legislation yet, but it's still in the process of being developed. But this is more for businesses that actually can't pay their debt. So we're sort of flipping this on its head now. So let's have a discussion around that. So the Business Debt Hibernation Scheme, do you want to tell us about that, Shane?
Sure. Look, Hayley, I think it was Friday, the 3rd of April, our government, our New Zealand government, announced changes to our Companies Act 1993. And it's aimed at supporting New Zealand business through our COVID-19 epidemic. The changes will be applied, whatever they are, they'll be applied, it is presumed, retrospectively. And look, the changes are designed to ease the pressure on businesses and their directors who maybe now are facing insolvency issues, and really to avoid companies from being placed into liquidation. It's important for everyone to know that the government does not want businesses to go into liquidation at all, if possible. Secondly, prematurely. And I think this is a time, thirdly, where the debt collection industry, credit controllers and managers and other business people really need to be mature. They need to be professional, and they need to make good, sound decisions that benefit both the creditor and also the debtor. However, I do need to qualify that though, Hayley, and say, and I say, forgive my casualness of comment, but to be warm and fuzzy in a business relationship, especially around debt collection, good faith, goodwill, and information sharing must come from both sides.
Yep.
Because if a creditor doesn't receive the information that they need to be able to make an informed decision about the best way to help their debtor or what they can do, then that forces their hand. Of course, communication breaks down, legal action is commenced, perhaps unnecessarily, further costs may be incurred, and it creates a worse situation. So it's important that both sides are really transparent, upfront, and truthful with one another. The current position, as most viewers will know, is that we're dealing with the Companies Act 1993 here. There's two main areas that deal with the directors of a company, and that is Section 135 deals with reckless trading, and Section 136 deals with the duties of a director in related to the company. Ordinarily, a director of a company must never agree to the business of that company being carried on in a manner that is likely to create substantial risk or serious loss to the company's creditors, or cause or allow the business of the company to be carried on in a manner likely to create a substantial risk of serious loss to the company. And of course, Section 136 here deals with incurring obligations. It's interesting to know that the director will not lose control of the company. It's not like receivership. When a company is placed in receivership, the receiver comes along and takes control of the company. Or for company administration, the companies ordinarily are removed. So the company director or directors will remain in control. Now, there is one mandate, is that for a company who wishes to apply or seeks to be admitted to the Business Debt Hibernation Scheme, it will be, some prerequisites, and one of those will be that 50% of the company's creditors and in number, and 50% of the total debt owing in number must be passed. So basically, if you have only 10% of your creditors who say, yes, we'll agree to a debt hibernation scheme, or if only 10% in value of the total debt owing by a company is agreed to be admitted to the hibernation scheme, it'll be turned down. So it's got to be 50% of their creditors have to agree in number, and 50% of the debt that is owed has to be agreed as well. So
on that one, Shane, if you've got, say, 10% of your creditors, but the value of those invoices are 50%, would it be accepted, do you think?
May be considered, but as we stand at the moment, it's got to be both 50% of creditors and at least 50% in number. Yeah.
Yep.
Yeah. And there's some reasons around that, which I think, Hayley, but as I said at the moment, what's interesting here is if a company sends a notice to its creditors that it's seeking to be, seeking a debt hibernation, then there's a moratorium on the enforcement of the debts, at least for that month. So a creditor cannot take action against that company during that month, whilst the creditors consider whether they will allow the debt hibernation or not. If the debt hibernation is approved, then the company has 6 months or can defer its debts for 6 months and move on from there. Remember, one thing that we have here is about the debt hibernation. It's just not simply, I'm going to defer my debts for 6 months and then thereafter, which totally will, but actually will be, Hayley, in total 7 months, because it'll be the month to make up their mind during the moratorium process and when the creditors are making their decisions, and then 6 months thereafter. So really 7 months in total. But the directors of the company must believe by wanting to have a debt hibernation a scheme approved, is that over the next 18 months that they will be able to trade their way, to trade effectively, keep staff employed, the company will continue to trade, and that they will become profitable and pay debts as they fall due thereafter. So that's interesting.
Yeah, very much so. And I think the big question is, what is a viable business at this point in time? And I think it's are we still waiting on further information to come out around that, or is it just you've got to pay your debts as they fall due?
Well, we're still waiting for more information about that, but one of the prerequisites, as I mentioned earlier, Hayley, is that a company had to be solvent or be able to pay its bills on the 31st of December 2019. Now, obviously, debt is going to be incurred prior to that date, and it's going to be incurred after that date for those businesses that are carrying on trading. But technically, again, this is this good faith information sharing that I mentioned to you earlier, Hayley, is that for creditors post the 31st of December 2019 to be able to make an informed decision to decide to allow a company to hibernate for 6 months or 7 months in total, as we've mentioned, then they need to know that the company was solvent on the 31st of December 2019. There's going to be two issues here. Companies now, such as, will go to their accountants and bookkeepers, such as Accountable, and be able to have that information at hand and disclose that where necessary, where appropriate, to the creditors to confirm that we were solvent on that day, and this is our plan, our business plan for the next 18 months. This is how we are proposed to do things, and that's a good start. Again, if company directors do not want to exchange information in good faith or in goodwill, or in some way prove that the company was solvent on the 31st of December 2019, a creditor can only make a decision, Hayley, based on the information that it's had. And if directors want to be reticent, they don't want to information share, they don't want to be helpful in any way, I guess that forces the creditor's hand. And at this stage, I am not aware, at the date of this webinar, Hayley, I am not aware the law surrounding statutory demands at the moment and whether that's going to be changed. I have heard, and it is hearsay, but I have heard that in Australia, they have passed a law whereby at the moment a statutory demand cannot be served upon a company for a debt under $100,000.
Right.
That's where it's slowing down, but we still need to drill down on that.
So I think the business debt hibernation scheme is, I know that there's forms and stuff available on government websites and things like that, but it's actually quite a difficult process when you've got to think about all the hoops to jump through. Would you agree?
Yeah, look, I do recommend that the directors seek out the information, educate themselves thoroughly on the issue, and really upskill where necessary. But build a professional relationship with your lawyers, your law firms, and your bookkeepers and your accountants, and seek out people that you trust to get good, correct, and prudent advice as we go through this reality.
And I think too, working with the people that we work with, companies in financial difficulty, emotionally, they're incredibly stressed. They don't have the time to actually jump through the hoops. And it's actually really embarrassing going to creditors and saying, I can't pay my bills. And in my opinion, these guys should actually be focusing on actually turning their business around and making it more profitable. So this is where we sort of jump in, and I'm sure you would be as well, where you can actually manage this process for companies to actually help them focus on their business, but also give them some breathing space.
Yes, I think, look, we are a debt collection agency, a credit management company, and a legal services company, but I think it's about a time where everyone needs help, guidance and assistance, and obviously good and correct advice. So we may pivot for a little while, and we'll be available to our clients on this issue of debt hibernation, what the requirements are, the information that they must have available, and what they must do to prove that debt hibernation is the correct decision for them and their creditors, and moving forward. And then perhaps also to discuss with the creditors the situation and broker peace agreement to move forward. And I think that's incredible, is that both parties through this, Hayley, are going to need peace of mind, and that's going to come through correct and comprehensive information, a clear plan, and for the future, and understanding both parties' needs about what they need right now to survive, if you can use it like that, and go on from there. So we're happy to pivot into that role at the moment and help, particularly help our clients and anyone else who may want some information and some assistance with a debt hibernation scheme or what they do. We're happy to do that. We can't be into a conflict of interest situation, so we can't act for one person and another one, who may be in a situation like that, but we can certainly act for one party and help them as much as we can.
And I think the key with the whole debt hibernation scheme, and I think this is still coming through legislation, is they've now actually softened the whole reckless trading obligations of a director, so that you can actually operate while insolvent through the next 18 months. Am I correct?
Yeah, absolutely. Look, what hasn't changed through all of this is the director's responsibility and duty to act in good faith in the best interests of the company and the creditors. So I think we need to reinforce that. What has not changed is a company director's responsibility to act in good faith and fairness to in the best interest of the company and also the company's creditors. Look, we're all in this together, and one decision that is made by a company is going to affect a creditor, and vice versa. So we need to be transparent. We need to be talking with each other, and we need to have a clear map forward.
Yeah, so if you can't pay your bills, don't go and get a Ferrari on loan and pay off the loan payments before your creditors, I'm guessing.
Absolutely. And I think, through this as well, if I could describe it like this, Hayley, it is business, it's in debts, but this is a time where, as I said, fairness, honesty, and being a good citizen is really going to come to the fore. And that's a good personal citizen and a good corporate citizen to come to the fore and work with each other. I'm sure that the High Court does not want to be seeing a large number of liquidation hearings and so forth. It's no good for the country. It's no good for business. It's no good for our future. I think we can collectively find a way through this together and to resolve it, whereby there may be debt to be serviced and debt to be serviced for some time, depending on amounts and circumstances. But as long as everyone's getting something in the interim that satisfies their legal and their legal requirements and their business requirements and so forth, I think we can all work through this well.
And I think we ran a marketing webinar on Monday, and the stats have actually come out, and it was 81% of people expect the companies they're going to work with to do the right thing. And that's what they're looking for, is people to actually do the right thing by others, your employees, your creditors, your shareholders. Right now, it is about doing the right thing by everyone. So, and I think that's probably the key message for today, is do the right thing, maybe.
Look, I agree. Look, firstly, I say to people at the moment who may be in financial difficulty, that not to manufacture a dispute to slow any process down, because really it is about a lack of affordability. This is a time for good values. And if you can't do something, I'm sure if you put your hand up and you had a meeting and you said what you can do and rather than what you can't do, and you find a solution, I think that's going to be the compass to get us through this, Hayley. I really do, because if people are going to raise disputes with no substance, they want to slow the process down, they want to hinder creditors and slow the process down, it adds to, unfortunately, agitation, frustration, and of course people end up taking decisions that can hurt both parties.
So the way I look at it is, I think there'll be a lot of small business owners, or even some large business owners may be impacted by this, and they will be looking at the Business Debt Hibernation Regime as something to be embarrassed about. Like, it's shameful to actually have to do something like this. So let's just keep ignoring paying the debt and all that sort of stuff. What would be your advice to these business owners?
This is generally, I would say there is nothing to be embarrassed about. This is an extraordinary time, and a very difficult time, and an uncertain time. And we need to get through it fairly, legally, and correctly. And I believe that we will. But reticence is not going to help the negotiation process, the goodwill between parties to come with a fair, to obtain a fair result and a fair resolution. But again, before you exchange any information, you want to make sure that you have taken the advice of your solicitor or your accountant. You don't want to put yourself into a position that is not correct at that time. But you need to generally to be fair and work with your people. Remember, if you're not receiving money and you're struggling in life, so is a person that you owe money to, or you know, whatever it may be. So that's all I can suggest at this time, Hayley. It is a moving target. There's a lot more information to come. And I do believe we've moved, the government has moved quite quickly to make some sound, the correct and sound decisions around this. The government is focused on the survival of business and thinking about individuals to make sure that we're all safe and we're going to get through this. And that's really what it's about. One of the other changes that have been made, Hayley, is that ordinarily, if a company was placed into liquidation, a liquidator would have the opportunity to look at avoidable transactions, or money, meaning money that was paid to third parties or the owner of the company themselves incorrectly, and they could claw that money back for up to 2 years. The company's now, I think, going to look at maybe reducing that period during the COVID time to 6 months. There's many other things that are out there to assist the directors and the companies to survive and get through this. So I think in general, if I can say professionally to everyone, Hayley, is that if you don't know something or you're unsure, ask. And I'm sure there's a lot of professionals out there that are happy to provide the information and the assistance and answer the questions. And I think there is a lot of information out there. And I would say for the directors of companies, there is no excuse not to really come up to speed with what is happening and what a company is entitled to and what it can do, because there's some good information out there. And I think the government's done a good job.
Yeah, I completely agree. And I think for me, and you know how I personally feel about the matter, if one of my clients came to me and said, look, I need the business debt hibernation scheme, I would have so much more respect for them than I would if they then criticised my work and why they hadn't paid me. So to put your hand up and actually say, will you consider the business debt hibernation scheme, I think has actually shows a business owner with huge integrity.
Well, I agree with you, because it's also, by doing that, you're thinking about your staff, their families, their futures, their careers. You're thinking about your creditor, and that not just walking away, but then you're wanting to maintain that very valuable business relationship in the future, and paying what you owe. And that's the thing. This is about, in essence, obviously paying what you owe, either in full or through a good compromise if those negotiations take place. But ultimately, and in summary, both parties are trading admirably, honestly, fairly, and they're both going to get a good result.
Yeah, and I mean, you know, the alternative of putting them into liquidation means you get nothing. So you might get something compared to nothing. But it is a very difficult position that we're heading into. So thank you so much for your time, Shane. It has been an absolute pleasure. I love talking to you about this stuff because you're just a fountain of knowledge. I understand that you're going to be a guest speaker at our bookkeepers conference that we've got coming up here in Napier in a couple of months' time.
Well, I can tell you, Hayley, I have to say that I'm looking for a hairdresser first and foremost. I'm looking a bit woolly. In actual fact, everyone has all been a good citizen up here in Auckland anyway. I can't even find a haircut on the black market, would you believe it or not? But I can't wait till hairdressers open up again, and I can make myself presentable for you in July. Hayley, just a wrap to you. You do a good job down there, and thank you for the invitation today. It's a pleasure to work with you as always, and I wish you well and look forward, if I don't see you before, see you in July.
No, that's awesome. Thank you very much for your time, Shane. We completely appreciate it.
You're welcome. I'll say goodbye. Thanks very much, Hayley.
Thanks.